the mood of the market from July of 2008, this has been in a multi-year downtrend, and the mood of the market has formally changed into an uptrend, and euro dollar over the next several years, I think we're going to see higher prices to come. We are in a high probability position to see new highs, but even if we don't see new highs, we possibly might just see a retracement back up to the trend line. I think what we're going to see here is a partial retracement lower, may come down to this 38% level. It may dig all the way down here to the 61 or maybe the 78% level. Either of these types of retracement levels are going to be normal and expected within euro dollar. And after we get that partial retracement lower, it's going to be a good opportunity to reload for a new trend higher. Hi there everyone, this is Jeremy with See the Waves, and welcome to this video. We are going to talk about the Elliott Wave analysis for euro dollar. And I want to start off, actually before we get into the Elliott Wave analysis, if you just use classic technical analysis, start off here with a longer term chart, I think there's one pattern that really stands out and you need to be aware of. And take a look at this weekly chart and this trend line. This is a trend line that has been covering prices since July of 2008. And so what we're seeing is when you cover the highs, prices broke up above this trend line in November of 2020, has come back to retest the top side of this trend line a couple of times since. And a couple of weeks ago, it has rallied off of the top side of this trend line. So I think we're at an important juncture here to where the mood of the market from July of 2008, this has been in a multi-year downtrend, and the mood of the market has formally changed into an uptrend, and euro dollar over the next several years, I think we're going to see higher prices to come. So with that, let's dig into the Elliott Wave chart. And let's scale down to the daily chart. So from a daily perspective, I'm looking at a 5-wave rally from the March 2020 pandemic low. And it was from this low, we've got a real nice clean 5 waves higher. We've got some divergence taking place between the wave 3 peak and the wave 5 peak on RSI. That's a very common occurrence. What we can expect after this 5-wave rally is a retracement back to the previous 4th wave, which happens to be coming into play right near the 38% retracement level. So this is another indication that suggests this is a completed impulse wave higher. And I've got a video out there that talks about what happens after a completed impulse wave. Most of the time you get a retracement back to the previous 4th wave. Sometimes it goes deeper than that, but many times that's the minimum expectation of what to look for. Now the shape of the retracement, of which goes back, to that previous 4th wave, can take a whole host of different shapes. In this case, I'm looking at this as being a double zigzag. Now, for those that have been following See the Waves for quite some time, this is not going to be a surprise to you, because actually on the day of the high, I had held a webinar, and in that webinar provided a couple of forecasts. One was that we're really close to a high. I think the high was at 2350 that day, and I had a minimum target to the upside of 2380. So we were within 30 pips of the first target. And that the next forecast was that we were going to see the largest correction lower in euro dollar since the March 2020 pandemic. So basically, we're going to have the biggest correction from this March 2020 low, and we have certainly that has certainly come to pass. And there was also another forecast where I had mentioned that we will probably come down, retest the top side of this near 116, and then excel higher. So all of that took place early in January 2021. So let me go ahead and share the last part of that forecast with you right now. Let me warn you, the video granularity is a little rough. It was a webinar recording, so please excuse the clarity on the video. See this black trend line? This black trend line goes all the way back to 2008. And so it's quite possible that what we'll see on euro dollar is that we'll see prices come back down here and retest this trend line. And by the time it does it, it'll probably be near where this previous wave 4 is, and then continue to work itself higher from there. So I think this is what we're going to see since it's the first wave of a potential zigzag or larger impulse. Well, I mentioned that that was a webinar recording from January the 6th, and I will do webinars from time to time. If you want to be kept abreast of when I'm doing future live webinars, I've got a link down in the notes section below where you can go ahead and enter in your name and your email address into that link. And then that way, when I do have future webinar sessions, you'll be alerted to it ahead of time. Also, if you like what you see so far, go ahead, press the like button below and hit the subscribe button. Let me know that you like this type of content. So that will let me know to do more of it. All right, so back on the chart. So we've got a wave higher, an impulsive wave higher. It looks like we've got a double zigzag lower that has come down to retest the 38% retracement level. Because the recent low has penetrated, the Y wave low has penetrated the W wave low, this eliminates the potential for a triangle pattern. Well, I say it doesn't eliminate it, but it severely weakens the triangle pattern, because that means this, where this Y is, that would have to be wave A of a triangle, and that just is not the right look when it comes to wave A's of a triangle. A of a triangle is usually pretty sharp, pretty quick. This one drug on for several months and didn't make a lot of progress. So, therefore, what I'm looking at here is this is wave 1 or A higher, and that we've got wave 2 or B lower. So with this being the case, we are in a high probability position to see new highs. But even if we don't see new highs, we possibly might just see a retracement back up to the trend line, resistance trend line, covering the end of the first impulse wave and the end of the X wave. But from a big picture perspective, this trend is still pointed higher, and it looks like we are getting ready to resume continued strength in euro dollar. Let's dig into a smaller time frame chart. Let's come out, let's take a look at a 4-hour chart. Okay, what I'm looking at from a 4-hour perspective, we've got an impulse wave. This could be a completed impulse wave, because right at the high tick that we saw here on today, just a few hours ago, we've got wave 5 is 61% the length of 1 through 3. So we've got very good symmetry on this impulse wave to the upside. And so therefore, we're going to apply our Fibonacci retracement levels. And after a completed impulse wave, most of the time we're going to see a retracement back to the previous 4th wave. And that previous 4th wave is down here between 118.50 and just shy of 118. So I think what we're going to see here, it doesn't have to happen, but I think what we're going to see here is a partial retracement lower. May come down to this 38% level. It may dig all the way down here to the 61 or maybe the 78% level. Either of these types of retracement levels are going to be normal and expected within euro dollar. And after we get that partial retracement lower, it's going to be a good opportunity to reload for a new trend higher that is going to be of similar size to this trend, similar size and or Fibonacci proportions to the size of this trend. So at this stage of the game, what we can do is we can come out here and we can apply our Fibonacci extension tool. And so if we were to get a, let's say, a retracement to the 38% level, then we could be looking at 120.50. Even down here to the 618, you might even see an extension up here to that 120 or 121.50. Either of those are going to be possible levels. and I believe it was this trend line. Yeah, so that trend line that was covering the end of the impulse wave and the X wave, that's up here. That's up here near 120, 150 to 120, 175. Just depends on how long it were to take for prices to get up there. But for the meantime, what we're looking at on Eurodollar is, don't be surprised if we get a partial retracement lower. This partial retracement lower is going to be an opportunity to reload to the upside, and minimum targets is going to be 120, that 120, 150 after we get a retracement back down deep into the 118s and maybe into the 117 level. So there's a couple hundred pips available to the upside. Longer term, I think there's even higher levels, and that I think we could see new highs above that 123. Now, that's not the only Elliott Wave account available. There are other Elliott Wave counts that do suggest we may come back and drag along this weekly trend line and dig a little bit deeper, because remember, on that daily chart, we have only retraced. Whoops, let me scroll back here. We have only retraced 38% of this whole retracement, right? We've only gone 38%. So it's possible we may rub along that trend line and dig a little bit deeper down here into the 618. I think that's lower probability at this stage. I think we're looking for higher prices here into the near future. So if you like what you see here, go ahead, leave us a comment, subscribe, give me a like, and we look forward to seeing you within our courses. By the way, I do want to mention that if you want to learn how to trade with Elliott Wave, we talk about these things within our course as to how do we come up with alternate counts, how do we weigh those alternate counts. We talk about that in our courses and within our community. So feel free to check those out below if you're interested in them. And I want to wish you all the best of luck in your trading. We will talk to you soon. Take care. Bye now.